Imagine posting, like, record-breaking revenues of over $12 billion, beating all expectations across the board, and then watching your stock just plummet by nearly 25%.
Yeah, it's a massive disconnect.
It really is. It's this bizarre, fascinating reality we're looking at right now. Welcome to the Byte-Size Brief. Today, we are putting QCOM completely under the microscope. Let's get right into it.
Sounds good. Like you said, it's a massive disconnect between their actual financial execution and the broader market sentiment. So to figure out what's actually happening behind the curtain here, we pulled a huge stack of research for our listeners today.
Oh, yeah. We went deep.
We really did. We're breaking down the Q1 2026 earnings call transcripts, a very revealing hardware deep dive from PC Mag, market analysis reports from TIKR and WCFF Tech, official press releases, and honestly, most importantly,
The Reddit reality check.
exactly, the raw, unfiltered sentiment from early tech adopters on Reddit.
Because we need to look beyond just the balance sheet, right? The stakes here are incredibly high. We need to answer one core question for your portfolio. Is QCOM successfully executing this massive transition from, just a cyclical smartphone chip supplier into an absolute powerhouse in artificial intelligence and automotive tech?
Right.
Or are they just a classic value trap, getting quietly squeezed out by aggressive competitors?
Okay, so compared to last quarter, what actually moved the needle here?
Well, if we look at the Q1 data, it paints a picture of massive short-term triumphs, but that's shadowed by some very heavy near-term caution.
Okay, walk me through that.
So in Q1, their main chip business, the QCT segment, hit a record $10.6 billion.
Wow.
Yeah. And a huge portion of that was handset revenues, reaching a record $7.8 billion. That surge was really driven by newly launched flagship smartphones and honestly much stronger than expected consumer demand during the holiday quarter.
Okay, so that sounds great.
It does. But looking ahead to Q2, QCOM is guiding that exact same handset revenue down from $7.8 billion to approximately $6 billion. Wait, a near $2 billion drop in a single quarter.
Yeah, it's a steep drop.
But if consumer demand for smartphones during the holidays was stronger than everyone expected, why hit the brakes so violently for Q2? I mean, consumers didn't just collectively decide to stop buying phones in January.
You're absolutely right, they didn't. This isn't a demand issue at all. It's a massive supply chain bottleneck. Specifically, it's the global DRAM crisis.
Okay, let's define DRAM for the listener so we're all on the exact same page.
Sure. Think of your smartphone's processor as like a highly skilled chef, and the DRAM, the dynamic random access memory, that's the kitchen counter.
Right, the workspace.
Exactly. It's the short-term workspace where the chef preps the meal. The more counter space you have, the faster you can cook complex meals or, run complex apps on your phone. Right now, the major memory suppliers who manufacture those kitchen counters are aggressively redirecting their factories.
Because they realize they can make significantly more money selling massive industrial-sized countertops to artificial intelligence data centers, right?
Precisely. They're shifting their manufacturing lines away from standard mobile memory and toward high bandwidth memory, or HBM.
Ah, HBM. We hear about that everywhere.
Right. HBM is essentially taking those flat kitchen counters and stacking them vertically, like a skyscraper, just to handle the insatiable data demands of AI servers. And because of this massive shift in manufacturing, there's an industry-wide memory shortage for smartphones.
So prices are surging.
Exactly. Handset manufacturers, especially the major players in China, are taking a very cautious approach. They are actively scaling back their build plans because they simply cannot source enough memory at a profitable price to physically build the phones.
Hold on, how does that actually affect QCOM's stock price for regular investors like me?
Yeah.
It sounds like you're saying QCOM has a massive line of hungry customers out the door, but the restaurant literally ran out of plates to serve the food on.
That is the exact mechanical bottleneck. QCOM has the processors ready to go, but their clients cannot get the memory required to finish building the actual devices. And the ripple effects across the broader semiconductor supply chain are just massive. We're seeing capacity limitations at leading foundries for advanced nodes across the board. The memory suppliers are heavily prioritizing enterprise data center clients over consumer electronics, which creates this whole macro-level dynamic.
Right, but what does all that actually mean for QCOM investors right now?
It translates to near-term volatility, but And this is key. QCOM management is responding aggressively to build a defensive floor under the stock.
Okay, how are they doing that?
To offset that temporary $2 billion handset revenue drop, they are executing massive capital returns directly to shareholders. They literally just announced a staggering $20 billion share buyback program and bumped the quarterly dividend to 92 cents per share.
So they're opening the war chest.
They really are.
Yeah.
And as an investor, that's a massive signal. It indicates management firmly believes the stock is undervalued at these current levels.
Yeah, that makes sense.
They're using their tremendous free cash flow, which, by the way, is supported by a 31% operate margin in their chip business and an incredible 77% margin in their licensing business.
Wow, 77%.
Yeah, the licensing is wildly profitable. So they're using that cash to essentially absorb the shock while the global memory supply chain normalizes over the coming quarters.
Okay, the financial floor makes sense. But we really have to look at the structural risks here, because the internet is not just worried about a temporary memory shortage. Let's talk about the giant elephant in the room. Apple. Bernstein analysts actually just downgraded QCOM stock to a market perform with a $140 price target, largely because of this Apple threat.
Yeah, the Apple transition is easily the most heavily debated risk factor on retail forums and institutional desks alike. Apple has been actively working for years to develop its own in-house 5G modems to replace QCOM's silicon inside the iPhone.
And that would be a huge hit.
It's massive. Current estimates suggest that if Apple successfully transitions entirely away from QCOM, it represents an estimated $1.75 per share headwind to earnings. That is a massive chunk of high-margin revenue to just try and replace.
I see this brought up constantly on Reddit, and the question is always the same. Apple has practically unlimited capital, right? And some of the best engineers on Earth. Why is building a cellular modem so difficult for them? Why haven't they just done it yet?
Because building a cellular modem is fundamentally different from building a fast computer chip. It isn't just about processing zeros and ones efficiently. A modem has to be perfectly backward compatible with legacy 4G and 3G networks.
Right.
It has to seamlessly switch between different radio frequencies as you drive down the highway at 70 miles per hour, communicating flawlessly across hundreds of different global telecom carriers without ever dropping your call.
That sounds incredibly complex.
It is, and more importantly, achieving all of that requires navigating an absolute minefield of legacy patents.
Ah, the foundational patents. QCOM basically invented the core technologies for early cellular communication, like CDMA, right?
Exactly. Technologies like CDMA and OFDMA are the bedrock of how devices physically communicate over airwaves. So even if a competitor like Apple manages to engineer a brilliant piece of silicon, they frequently find that the most efficient way to route the signal basically infringes on a fundamental patent that QCOM filed 2 decades ago.
Wow.
That patent portfolio forms an incredibly wide, deep structural moat.
Even with that moat, though, QCOM knows they can't rely on smartphone volume forever, especially if overall handset shipments are dropping globally. The sources point out they're pivoting hard into a strategy called premiumization. Explain how that works as a defense mechanism.
It's a strategy of offsetting lower overall volume with much higher average selling prices. According to data from Counterpoint Research and WCF Tech, overall smartphone chipset shipments might decline globally by roughly 7%.
Okay, so volume is down.
Volume is down. However, the total revenue in that market is still expected to grow by double digits.
How does that work?
The reason is that consumer behavior has shifted. People are holding onto their phones longer, but when they do finally upgrade, they're buying the absolute top-tier devices.
Right, they want the phone with the best camera, the AI features, the longest battery life.
Exactly. Industry projections show that every 1 in 3 smartphones shipped in 2026 will be a premium device. And in that highly profitable premium space, QCOM completely dominates.
Do we have numbers on that?
Yeah. For example, they are retaining an estimated 75% market share in Samsung's upcoming premium device lineup. So they're perfectly happy selling fewer chips overall, as long as they capture the vast majority of the high-margin premium sales.
But they're also looking far beyond smartphones. Let's pivot to the automotive sector, because the numbers from the earnings call here are just staggering.
The automotive pivot is arguably their most compelling long-term growth narrative. In Q1 alone, their automotive revenue hit a record $1.1 billion.
And it's up, what, 15% year over year?
Yep, up 15%. And even more impressive, they are projecting that growth rate to aggressively accelerate to over 35% in Q2. They have amassed a staggering $45 billion automotive design win pipeline.
45 billion.
Yeah.
What exactly are they selling to automakers, though? The sources keep using the phrase Snapdragon digital chassis. To the average listener, that just sounds like pure marketing fluff.
I know it sounds like jargon, but it represents a fundamental rewiring of how a car is engineered. Historically, a vehicle was a mechanical machine with dozens of isolated, quote-unquote, dumb computers scattered throughout it.
Right.
One microchip controlled the windshield wipers, another completely separate chip controlled the anti-lock brakes, and another ran the dashboard radio. They didn't communicate with each other. It was a massive, inefficient web of wiring.
So QCOs is stepping in to clean up that mess.
They're replacing it entirely. The digital chassis centralizes all of that computing power into one high-performance nervous system. One unified platform handles the advanced driver assistance systems, the ADS, as well as the infotainment screens, the 5G connectivity, and the cloud telemetry.
That's a huge shift.
It really is. When QCOM signs a major collaboration with a supplier like Bosch, who has already delivered over 10 million Snapdragon cockpit platforms, or when they sign a long-term infotainment agreement with the Volkswagen Group, they aren't just selling a basic radio chip, they are becoming the central brain of the entire vehicle.
This mastery of incredibly power-efficient processing, like the same architectural logic that lets a car process massive amounts of camera data without completely draining the EV battery, is exactly what QCOM's weaponizing right now to attack the laptop market. Let's talk about laptops.
Oh, the personal computer space is undergoing a seismic shift right now, and QCOM is the tip of the spear here. We looked at a very thorough hardware review from PC Mag covering the new Snapdragon X2 Elite Extreme chip.
That's the one powering the new Asus ZenBook A16, right?
Yeah, exactly. And the benchmark data is phenomenal. It features a completely re-engineered 18-core Orion CPU and an 80 TOPS hexagon NPU.
Okay, let's unpack the jargon again. For the listener who just wants a laptop that doesn't freeze when they have 30 browser tabs open, what is an NPU and what are TOPS?
Right, good question. Historically, your computer relied heavily on the CPU, the central processing unit. Think of the CPU as a brilliant general manager of a company. It can handle absolutely any task you throw at it, but it generally processes them sequentially, one after another.
Makes sense.
Then you have the GPU, the graphics processing unit, which handles video and gaming. Now we have the NPU, the neural processing unit.
Where does the NPU fit into that corporate hierarchy?
The NPU is a highly specialized department designed exclusively to run artificial intelligence algorithms. It uses matrix math to process neural networks incredibly efficiently. It doesn't do general computing, and it doesn't render graphics. It just does AI math.
But it does it way better.
Exponentially faster and with a fraction of the battery drain compared to a CPU. And that 80 TOPS metric, that stands for trillions of operations per second.
So it can perform 80 trillion AI calculations every single second.
Correct. For context, earlier generation AI laptops were launching with like 10 or 15 TOPS. Hitting 80 TOPS means this laptop can run massive, complex AI models entirely locally without ever connecting to a cloud server.
That's wild.
And the performance metrics back it up. In multi-core performance, it's outclassing nearly everything in its tier. It even beat Apple's M5 chip in the Solar Bay ray tracing benchmark, which tests advanced lighting and reflections. All of this while boasting over 21 hours of battery life.
Okay, the numbers are incredible on paper, but we have to do a Reddit reality check here.
Let's do it.
I spent hours reading through forums of early adopters, and people are deeply frustrated with basic usability. We need to talk about Byte-86 versus ARM64 architecture, and specifically the kernel wall. If this laptop is so powerful, why are corporate VPNs and anti-cheat software for games like Valorant just completely crashing?
This is the messy reality of an architectural paradigm shift. It really comes down to how the processor fundamentally understands instructions. For decades, Windows laptops ran on Byte-86 architecture, which is known as CISC, or Complex Instruction Set Computer.
Okay.
Think of Byte-86 like a master craftsman. You can give this craftsman a highly complex blueprint, and they'll figure out how to build the furniture. It's very capable, but interpreting that complex blueprint takes a lot of time and energy. It's power hungry.
And ARM64, which is what QCOM uses, is totally different.
Very different. ARM64 is RISC, or Reduced Instruction Set Computer. Think of it like a highly optimized fast food assembly line. You only give the workers very simple, basic instructions, but they execute millions of them in a fraction of a second. It's phenomenally power efficient, which is why ARM has dominated smartphones for years and why this laptop gets 21 hours of battery life. But here's the massive friction point. Almost every piece of Windows software built over the last 30 years was written in the language of the master craftsman by 86.
So when you try to run an older by 86 program on this new ARM hardware, the computer has to actively translate those complex instructions into simple ones in real time. And that translation process is called emulation.
Exactly. And that emulation overhead burns through battery life and generates heat, essentially neutralizing the efficiency advantages of the new silicon. Furthermore, standard bare metal backup tools and drivers for professional printers, like older brother models, simply fail because they just don't understand the new architecture.
That brings us to the kernel wall. From what I understand, the kernel is basically the VIP nightclub bouncer of your computer's operating system, right?
That is a perfect analogy. The kernel has ultimate security authority over your hardware. Now imagine that bouncer only speaks English, which in this case represents the legacy by 86 code.
Right. And the new applications only speak Spanish, the ARM64 code. So emulation acts as a real-time translator so the app can get into the club.
Right, but the kernel does not trust translators for high-level security access. If an application requires deep system-level integration like proprietary corporate VPNs or aggressive anti-cheat software for gaming, emulation is not allowed. You must speak the native language.
Wow.
Yeah, if the developer hasn't written a native ARM version of their software, the bouncer simply blocks entry entirely. That absolute barrier is the kernel wall.
So how does QCOM overcome this? You have blazing fast hardware, but an ecosystem that's fundamentally broken for legacy power users.
They are overcoming it through sheer hardware saturation. While the emulation hurdles are very real today, QCOM is rapidly evolving the software landscape by sheer force of will. Major software vendors are consistently releasing native ARM versions of their applications now.
It's just a matter of time.
Exactly. QCOM is aiming to commercialize 150 different Snapdragon X-powered PC designs this year alone. They're betting that flooding the market with superior hardware will force the remaining software developers to adapt and write native code. It's a long-term play that requires short-term patience.
And they're using the exact same low-power, high-efficiency ARM logic from their laptops to completely revolutionize how we use our smartphones. This brings us to artificial intelligence. CEO Cristiano Amon was at the Semaphore World Economy Summit in D.C., and he made a massive claim. He said 2026 is the year of AI agents.
Amon's thesis is that the era of opening and closing individual apps is ending. AI agents, which are basically software that can autonomously perform complex, multi-step tasks across your applications, will soon replace the traditional operating system as the center of the digital experience.
Give us an example of how an AI agent actually functions differently than just, asking Siri a question.
Well, imagine you want to book a flight to Chicago, secure a hotel downtown, and text your spouse the itinerary. Today, you open a travel app, then a hotel app, then your messaging app.
Right, it's very manual.
An AI agent does all of that in the background with one single voice command. It navigates the interfaces for you. We're already seeing the first iterations of this. ByteDance recently launched the first truly agentic AI smartphone, and it's powered entirely by the Snapdragon 8 Elite platform.
And this ties perfectly into the massive breaking news that sent QCOM shares surging over 8% intraday just a couple of days ago.
The market reacted aggressively to reports that QCOM is partnering with OpenAI alongside MediaTek and Luxshare Precision to co-develop advanced AI smartphone processors targeted for mass production by 2028.
That is a huge deal.
It's a highly strategic alliance. By deeply integrating OpenAI's models directly at the silicon level, QCOM is building an open ecosystem standard to challenge Apple. Any hardware manufacturer will be able to buy a QCOM chip and instantly have access to the most powerful AI capabilities on Earth.
But why is QCOM so obsessed with running these AI models locally on the phone? I mean, why not just let NVDA process everything in massive cloud data centers and beam the answers down to the device?
It comes down to inference per watt. Inference is the act of the AI actually thinking and generating an answer. NVDA completely dominates the training phase in data centers, which requires gigawatts of power.
Right.
QCOM wants to own the inference phase at the edge, meaning on your actual device. Running AI locally offers three massive advantages: power efficiency, zero latency, and absolute privacy.
Privacy being the key, right. If my AI agent needs to read my personal text messages and banking apps to book that flight, I absolutely do not want that sensitive data leaving my phone and traveling to a server farm.
Exactly. And regarding latency, if the AI is driving a real-time translation during a live phone call or making a split-second decision for a car's braking system, you simply cannot afford the round-trip delay of sending data to the cloud. By partnering with OpenAI, QCOM is ensuring that the world's most advanced AI models run best, fastest, and cheapest on their proprietary silicon.
You don't compete with the giant data centers. You just own the endpoint where every single consumer actually interacts with the AI. It's a brilliant strategy.
It really is.
Oh.
And while the entire market is obsessively focused on this AI edge narrative today, QCOM is quietly designing the infrastructure for the decade ahead. This brings us to a critical, forward-looking catalyst that really isn't getting nearly enough attention in the mainstream press: 6G.
6G. I mean, half the country feels like they barely have a reliable 5G connection yet.
True, but in the semiconductor industry, you design 10 years in advance. While competitors are fighting over AI market share today, QCOM is methodically leveraging its historical patent portfolio in CDMA and OFDMA technologies to lead the early system validation for 6G networks. They're actually targeting a commercial rollout by 2029.
How is 6G fundamentally different than just a faster 5G connection, though?
6G is expected to integrate artificial intelligence natively into the radio access network itself. Imagine a world where the airwaves themselves are intelligent, dynamically routing computing power exactly where it's needed with near zero latency.
Wait, does that mean the phone in your pocket becomes so deeply connected to the network that the concept of a local device versus a cloud server basically disappears?
Exactly. If QCOM successfully integrates their AI agents with their proprietary 6G networks, they could render massive centralized data centers far less relevant for everyday computing.
That's insane.
That isn't just a hardware upgrade, that's a complete re-architecting of the global internet. If they own the foundational patents to the very airwaves the AI needs to communicate, that creates a recurring revenue stream that is incredibly hard to disrupt. Competitors can build faster chips, but they cannot easily bypass fundamental telecom infrastructure patents.
Wow. All right, listeners, what's your take on the future of QCOM? Are you bullish, bearish, or just sitting on the fence? Let us know in the comments. See you next time on the Bite-Size Brief.